gaps. The previous day there had been a gap up opening, and as I had mentioned, this level is now very important because if the market breaks 11094 and goes down, it needs a lot of momentum, and if it breaks through, it will probably end up at wherever the next gap was. Gaps are closed quickly, and also we know the markets have been trending upwards for a while, right? Now the next day what happens is we see the market goes up, there's a gap up opening, it moves up to 11200 again. That could be a resistance level because of the double zeros, and immediately you see a huge red candle. We haven't seen a red candle like this for quite a while. However, you have to understand exactly what's happening. The mistake I saw loads of people make on this particular day was everybody started initiating sell positions. Some people even bought like far out of the money puts and just held on to them just because they saw a green candle and because people were expecting profit booking. So just because you expect something to happen, okay, the market has gone up by 500 points, it's already at 11,200. You know, everybody has some sort of FOMO happening where, man, I wish I'd bought some stocks when the market was at 8,000 or 9,000 or something. It has to fall down. But always wait, always see what's important. As we mentioned in the previous video, okay, fine, the markets fell down, but there is a very important support level here. It has to break this to fall down significantly. So what is your risk to reward if you take up a sell position here? Your reward will just be till here. You can't really buy out of the money puts at this point of time, correct? Next candles, the markets retrace slightly. However, they aren't really moving upwards. So you're still clearly, and it moves downwards, right? Downwards some more, and it is almost near our gap, correct? At this point, again, when the markets are falling, please don't get the habit of, okay, since it's a sell, since we saw a big red candle here, the markets will fall down and crash completely. It has to break certain levels. This is where support and resistance comes in, correct? So it is at a somewhat important level because it is around this zone. Markets fail to move up and you see a red candle. The markets are now trying to push up higher. Is it a buy as of right now? No, not really, unless it clears the entire last down move. Unless it clears 11140, you can't really say anything about what the market is doing. It could just be corrections. It could form a new lower low as well. It could try to break down again because sellers are still in control right now, correct? Okay, now you see the markets are now moving upwards, correct? Your green candles are getting larger in size. See some selling pressure, and this is now confirmed as your day's low, correct? So once the market breaks this, that's when you can think about sells, big sells. The market now moves upwards and it breaks this level. Once it breaks this level, then you can start thinking about, okay, fine, this is it. Sellers tried to push it downwards, they failed. They tried again, they failed. They tried again, they failed. And now all the sellers must have now left the market, correct? Because they've tried multiple times. The market has broken the last downward movement that happened. The market has broken that, so it could just keep going upwards now. Market forms a bit of a range. Again, ranges are nothing to be scared of unless it breaks down this completely or it breaks up. There's nothing to be scared of in ranges. Ranges are when you have to make decisions. You have to be ready because a range is when buyers and sellers are fighting. And you can still see there are no lower lows being formed. The last green candle hasn't been absorbed. And you see big green candles. This last entire move, as we said before, has been taken out completely. And now the markets just keep rising. The market keeps rising till here and you see some selling pressure, right? Is this range important? Is there anything important about this? Because this is extremely important. This price, 11,200, is super important. Why? Because this is the price where the market opened in a gap up position, but the sellers immediately came in and rejected that price completely, right? This level will now, in the future, be extremely important. This one, it is around the close of a previous day. This is the highest the market could really go up because the next day when it gapped up, it immediately pushed all the way down. And you can start seeing some selling pressure happening here. Okay, so after we see some selling pressure, the market is now forming a bit of a range. But what we can see here is that this level is holding up pretty nicely. The market is unable to break through this level, correct? And maybe something else is happening. Sellers might be coming in. And we see a significant red candle. Now, again, if the last entire up move is taken out, if this is taken out, correct, then we can start initiating sell positions. or if this is taken out if you're conservative, right? We see the market try to fall. You see some selling pressure around here, but the market is now trying to move down. Stays in a range, it goes up slightly, it doesn't really make a new higher high. Yeah, it fails to make a new higher high. Tries to go up again. Every time it goes up, it gets smacked down. So you now know that since this level has been tested multiple times, this is probably very important. Unless you see a big up move, this level is not going to easily break. Markets try to move down, have now started to move down again. And you can now think about it this way. People must have bought here, got stopped out here. People must have bought here, got stopped out here, right? So this level will now be in their memory. This is what they'll remember, that, okay, every time the price comes here, the market goes down. So people will stop buying. People won't really be initiating buy positions here. Why? Because they don't think the market can go up anymore. At this level, some people are probably still buying, right? Because you're in an uptrend, the market can go all the way up, but it didn't happen. So now this time when they try buying again, the markets fail the same level. This time when they try buying again, markets fail the same level. So this is the psychology behind support and resistance. This is how support and resistance works. So you shouldn't really be looking at how high up the market has gone or where you think it might go up to. Okay, it has tried to break this, but it might just go up again. You have to just take what the market is giving you. Don't try to make your own predictions. Don't try to imagine what the market will try to do. And now you can clearly see, ever since this level, the sellers are in control. The markets have been pushing downwards. The last big green candle that you saw, it has been absorbed. And sellers are now in control because they tried to move up here, right? Fell down, tried to move up here again, fell down. It's failing to make a higher high. You clearly know sellers are in control. But let's see, if it breaks through this level, if it breaks through somewhere around here, you can start initiating the sell positions. And your next resistance level will probably be the day's low, correct? So you will have a good risk to reward ratio. Price starts moving up again, but it moves down, tries to move up. Okay, at this level is where you can actually take up a position. The price jumped up significantly, right? It broke through here, it went all the way up, but again, what do you see? Everybody got smacked all the way down, right? Everybody got smacked all the way down till here. What has happened at this time is all the buyers who were whoever initiated a buy position here, this time they would have exited because they've kept trying to break this level, but because of all this pressure, they now don't think the market can break this level because they've been rejected multiple times here. So people aren't really, at this point of time, nobody will really be looking at buy positions. The buyers will probably just leave. And that's what you see. You see immediately a big candle. It takes this entire position out. When it falls down somewhere around here, you can probably enter a short position at somewhere around this level. And your target price will obviously be the day's low. So you guys have entered a short position at somewhere around this level and you're waiting to see where you can exit your position. So one, you want to see where the market falls down to. This is a major big downward movement and you have some support at this level, right? Because it has touched this line multiple times, somewhere around here. And then your major support is right here at 11,095. You want to see if the market breaks this. If it breaks this, it should fall all the way down, right? So nothing, immediately the market pushes all the way down and reaches somewhere around here. Goes up and the market has now fallen and almost it has broken through your gap, correct? The market has broken through your gap. Now, if the market falls down anymore, if you see another red candle, start your sell positions because this sell is going to go all the way down. You'll have a really good risk to reward ratio. Your stop loss can just be somewhere around this level because even if the markets range up till here, they still have a chance to fall down again, right? But immediately you can see buyers starting to come in. It's the first time you can see some sort of a green candle. However, this is not a reversal. You can't initiate positions so early. You have to make sure that at least a couple of candles are absorbed to see if this honestly acted as a really good support, correct? Markets stay in a range and they start to move upwards. The last two red candles have now been absorbed. Also, look at the strength of the down move. The first candle is bigger. The next one is big as well. The next two are taking longer and longer to fall down. The momentum as you are reaching an important support area is dropping. you would need a lot of momentum to break an important support or an important resistance or an important gap. Okay, so the market then again starts to go down. And this time, what you're looking for is, do you really expect the market to break through? Is this a good enough price for the market to fall down significantly? Correct? You want to be judging, again, you are really judging the health and momentum of the down moves to see if they are going to break this entire gap or if these are just fake outs. Others are still trying to push the markets all the way down, right? Buyers are coming in again. They aren't really able to push too much or cover way too much, and you see selling pressure happening. The markets almost go all the way down, right? They reach around 1150. They try to completely cover the gap, but immediately you see green candles coming in. The markets are now pushing higher. And once you see this large green candle, you now know that the buyers are back in control. The buyers have taken control of this entire range again, right? The previous important support that we talked about. This is, we are right back here, and this entire down move, this entire thing was probably just a fake out, correct? So you can imagine, when you look at a longer time frame, when you look at a longer time frame, this entire thing, especially if you look at like a 1 hour time frame, this will just be a wick, correct? Because the markets moved down, but then they came up immediately, a V-shaped recovery or whatever you want to call them, or whatever you want to call that. Prices go up, you have one high here, right? You have one important level here, and that gets broken as well. The prices then form a range and the day ends. A day is psychology. Once you see a big red candle, you can't just start buying out the money puts, even though they may have been profitable if you'd entered and exited them right on time. But you have to look at what your levels are. For if you want to buy a big out of the money put, you have to wait for this level to break. Correct? You have to wait for this level to break as well. So even if you had initiated a short position somewhere around here, by the time the market moved up, you might have exited. You might have exited here, or you definitely would have exited at this point of time, which is why your entries and exits are very important. You can't just keep holding on to trades and hope that you will be correct and the markets will eventually move downwards, because the risk to reward ratio will be completely screwed. If you have a 20-point stop loss, then your target can almost never be less than 20 points unless you got something wrong. So the markets move down, then they go up. You have to wait and see what's happening. This big down move could have been caught, especially if you notice that this level is very important. And the last time it went up, sellers came out in full force and really formed a huge wick here, right? So over here, when the market has now falling, it now broke this level, you could have entered a short position here. When it broke this level, you could have entered a short position here. But by this time, you definitely should have been a seller, correct? With your target being somewhere around this level. At this level, again, we see the market stop, correct? One green candle, which hardly does anything because it's very confused candle with wicks on both sides. The market pushes down again, and this is where you have to really judge, right? For most people, at this point of time, once the market has come here, you have to wait and see, is this was, again, this is at this level, correct? So you can see how well our support and resistance works. You have to see, will this level be broken again by the buyers, and are we now in an up move, or will the sellers take control? The sellers take control, push the markets down, but at this level, once you see all these green candles being formed, this is when you stop initiating sell positions. You might have missed out on this entire drop, but that's fine, correct? You can't really win every trade, and you can't really predict exactly what will happen in the markets. All you can think about is, this could have been a good trade. Once you see that this entire down move, the last down move has been taken over at somewhere on this level, you could have initiated a buy position because the market is now going to go upwards. Now you can be sure about what's happening, that this was entirely a fake out. The market will definitely break this level, and then it will probably try to go up from here as well.